Hello, this is Kei from Japan, Tokyo. And today I will record my analysis on Euro Pound because first of all I say it's a good chance to buy and I will tell you the reason from my own analysis. But today, especially I wanted to talk about how to see a chart without any bias so that you can always be flexible whether the price goes up or down because no one can predict the movement in the future, right? But good traders always make profit over time because they have plans. And those plans are based on if questions. Like if the price goes up, then I will do this. Or if the price goes down from here, I will do that. Things like that. It's called conditional branch thinking. Like you create a few scenarios depending on the possible conditions of the chart. So it's kind of close to the algorithm in programming in IT technology. And this is the thinking pattern I always have every time I trade. And I will show you how I do this. So before you move on, please press a good button if you like this video and make sure to subscribe and hit the bell so that you get notifications every time I upload new Forex videos. Alright, let's get started. Okay, so this is the daily chart of Euro Pound since the last year of June. But let's just overview the movement first. Since the last June, the price went up, supported by this 20 MA, the pink line. Then it broke the 20 MA downwards and also Ichimoku cloud downwards. So it suggested it's the end of the bull trend on this day time frame. Then it went up and down a couple of times here, creating like double bottom. Then the price went up, but it couldn't go over the recent highest here. So eventually the price was resisted and went straight down, breaking 20 MA and Ichimoku cloud downwards. Then it went up once or twice. Then it went down further. Then the price has been supported at this 0.8489 level a couple of times and created like triple bottom. And after that the price broke 20 MA and also Ichimoku cloud upwards and started bull trend. And from this point, the price has been supported by this 20 MA a couple of times, but in the end of July, as you can see, it went down to this level where you can draw a line like this on these points. Then it was straight upwards, breaking the recent highest and renewed the highest price level. Then now it's coming back down to the previous highest price level. So as far as I see the chart, it's a great place to buy because if the price is supported on this level, the initial target could be the recent highest up to this level, which is about 250 pips. And in that case, the stop loss will be right below the most recent lowest. So the risk to reward ratio will be very good. Also, when I place the Fibonacci retracement, hold on, let me place it. Yeah, when I put the Fibonacci retracement between the recent lowest and highest, the current price is near 61.8%. So if the price is supported by this level and go up, then I can expect a big profit and it will be a great entry timing right now. Alright, that was the scenario when I buy in this condition. But think differently. Imagine when the price breaks downwards here. If the price breaks this level downwards, initially the price might extend because there might be stop loss orders of those who have buy positions below this line. So if the price breaks here downwards, it could go down to this level. And another case might be, it will be a range for a while at this level, consolidate and hovering around like this. And eventually the price goes up or down. That's something we never know. However, I'm thinking to place buy for now and I will tell you the reason why later. Alright, let's look at 1 hour chart and see the current price action closer. This is the 1 hour chart of Euro Pound as of 23rd of August 2019. And if you look at it, a few days ago, the price was coming down, resisted by 20 MA, and then it became a range consolidation, kind of looking like a flag pattern here. And the price broke downwards by following the bearish trend direction of this 1 hour time frame. And this is where the support line is in daily chart as you saw earlier. So that's why the price stopped here once. And this is why I see multiple time frame, because if you don't look at daily chart and only looking at this 1 hour chart, you never expect the price will stop here, right? And you might be jumping into the market and sell here after you saw this huge drop, and you will be getting lost by now. Because of the bearish trend on this 1 hour time frame and it's strong, there was a chance that it might not be supported here and went straight downwards. And it still may be the case, but that's something no one knows. But if you are able to see the line here on daily time frame, at least you have an expectation that the price might be supported here, and it could bring you an additional option to create your own scenario. And that's why it's important to see a chart in multiple viewpoints so that you won't be biased just toward one direction. So whenever you place any orders, always think from buy side and sell side, then you make your own call. That way you won't be fooled by the price action that you didn't expect. So anyways, as far as I see the chart, the price looks to be supported here once, and I see the long wick pointing downwards here. So that's why I think it's a great chance to buy here. Plus, if I place long here, the risk, right, the stop loss will be placed here, and it can be just like 20 pips, which is a good deal to expect a big amount of reward towards the previous highest of daily time frame, which is like 250 pips, which means the risk to reward ratio is like 1 to 12 on this trade. And also, even if the price goes backwards and get loss cut, I just get 20 pips of loss, and it makes me easier to control the lot sizing too. So I could place long on this 1 hour time frame, but let's just see 15-minute chart and see what we can analyze further. Okay, here is the 15-minute chart. Look how fast the price dropped yesterday, then supported on this level as we saw in daily time frame. And after the drop, you can see the price has been lower high, higher high, and it's moving up gradually. So you can see the current sentiment of the market is bullish within this smaller time frame. However, the recent pullback is strong here, but as long as the price won't break this lowest level downwards, we can say it's still bullish. So let me place buy here and place stop loss right below the recent lowest price level. I just go for 5 lots this time because of 2 reasons. One is I am still doubtful that the price might be break downwards, because I still don't confirm the pushback after the spike down. Like if the price is pushed back twice or a couple of times here like this, then the support here will become more reliable. But I don't see that evidence yet, and that's why I'm still doubtful. But the reason why I place long here is, and this is why I just place 5 lots, but that's because, like I said earlier, I expect high reward on this trade. The target is the recent highest on daily time frame, which is like 250 pips. So on this trade, I will be like a swing trader. Like I will let the time earn money, not by the lot sizing. I don't know how many days I will hold the position until it hits the target, but as long as it remains bullish, I will keep holding the position. But for example, if the price is resisted here a couple of times, or if there will be a triangle or flag chart patterns here, then there will be a great chance that the price will drop down further. So in that case, I will close the position before it hits loss cut. Okay, here is the chart after a few hours later. I was actually watching the chart whole time, but when I was looking at price action right here, I was about to cut loss if the price breaks this support line downwards. But eventually it was supported here a second time, slightly like lower high here, and the price keeps going up, and I have like 30 pips of profit now. So let me move the stop loss to slightly above my position so that it will be either win or break even game, because I will be going to bet anytime soon. So this way I will avoid the loss. So let me move it, hold on. Okay. Alright, so what I see is that first of all, if you look at a daily chart, the price still looks to be supported on this line for now, but it might be tested a couple of times in the future like this, and eventually goes up or breaks downwards. And if it goes down, then I will see if the price will be supported by the Ichimoku cloud and goes up or not. Or the price might be breaking downwards, where the clouds get thinner here. But as long as the bullish momentum extends, I will just keep chasing with the profit. Read from 1 hour chart. It shows that the price has been supported twice on this level and it went beyond the recent highest. So like I said, the price might be coming back down and test this support line a couple of times more and eventually go up or breaking it downwards. However, if the price breaks the cloud upwards, then there might be a chance that the price keeps going up, supported by 20 MA. Alright, what do you see in 15-minute chart? It looks that the price already broke Ichimoku cloud upwards, and if the price is supported on this level of the recent highest, if the resistance line turns into support line, and there will be more chance that the price will keep going up like this. But at the same time, the price might break this line downwards and it keeps going down to test this lowest support line again. In that case, I will just lose the position with break even. Then I will just look for another chance to buy again with high winning probability. So today, I try to explain the chart with both up and down scenario. And this thinking pattern is very important in trading because if you are biased just in one direction or only in the direction of your holding position, then you cannot see the other side of the coin. And when the other side of the coin actually turned out, you might get panicked or regret or blame yourself or others, whoever gave you that signal. So no matter what indicators you use, always make sure to see the other side of the coin and get ready for it. Like I said in the beginning, conditional branch thinking is the key to success in trading, like myself in the long run. Alright, thank you for watching the video until the end. If you think you learned something from this video, please press a good button and subscribe and hit the bell so that you get notifications for my future Forex videos. Also, if you have any thoughts or ideas on this video, feel free to put your comments below too. Stay gold. Mata ne. Cheers.